So much happened in 2022, and yet people were not prepared for it. And as we moved through, we watched people getting hit left, right, and center, whether it was related to stocks, whether it was real estate, or anything else. I noticed this all over the place. And in fact, if you look back in the pages of history, you see the same patterns forming. That's why I'm able to give you the information today, which really highlights what we will see coming this year. It's so important to pay attention, number one, to what's happening with real estate and the effects of cheap money. It has to come around eventually. That's the way it works. The second thing I want to look at is the inflation battle raging on, how this has impacted families all over the world. But I will cover the data you need to know today so that you can protect yourself, your family, and look at really what's caused this and what will happen here this year. 2023 is here right now. I can't believe I'm saying it, but that's where we're at. Let's break it down. You don't want to miss it. Let's begin. I wanted to begin with this article here and show you the following chart. It talks about real estate. The wealth effects from changes in house prices are often exaggerated. The key point is that houses are different from other financial assets such as shares or bonds because people also pay to live in them. Some people will gain when house prices rise, typically older homeowners planning to downsize to a smaller property or to withdraw some of the equity from their home. But many others will lose, including younger families hoping to trade up or renters whose landlord needs to charge more to finance a more expensive asset. And we saw that very powerfully in 2020. Higher mortgage rates mean the boom is over. Cumulative house price increase by year, just showing us from 2019 up to 2022 what we had really been dealing with throughout that period. It shows you the same things happening all around the world. New home buyers are getting crushed. People with too much debt are getting crushed. In fact, I'm going to explain to you in depth in the breakdown section what happens when people take on too much debt during these periods. Let's look here. Canadian real estate buyers opt for fixed terms after variable shock. Now, for some people, they may not know how this works, but in some places, there are a lot of individuals taking on variable. Why? Because they can generally get a better deal. And when interest rates were dropping decade after decade after decade, it made sense in that regard to have your variable interest rate because you knew it was just going to get cheaper. But when things turn around, then you've got a big problem, a very big problem. Overstimulated Canadian real estate buyers are no longer opting for variable rate mortgages. This is according to the Bank of Canada. Right now, they're getting fixed rate. And I would have always advised that, in my opinion, just because having that knowing there. If it was a investment property, if it was something that you were making an investment on, like outside of real estate altogether, maybe you could say, all right, fine. But the home that you live in, you want to guarantee. You don't want to be out on your feet and have to deal with problems because of your own personal residence. I don't think you should make any mistakes with your own personal residence. That's just my opinion. You tell me what you think. Should you do variable? Is that okay with you? Do you take a little bit of risk? Do you pull all the equity out of your home? You're welcome to talk about that below. Canadian mortgage borrowers ease on variable rate loans. Look, they're saying just 29.7% of new uninsured mortgage credit in October had variable interest rate terms. That's down sharply from 40% before. It all depends on insured or uninsured. There's a chart that goes with that. You can see it for yourself. Look, the share of Canadian mortgage credit issued with variable interest. The darker line is uninsured, lighter is insured, just showing you the fact that a lot of people in Canada use actually a variable interest rate. So when they go from basically nothing, when you look at the actual interest rate that the central bank issues, and then you compare it to where they are now, it's a significant difference. This is crushing people, absolutely crushing people here and now. And it's not just the people who are, new home buyers barely making it through. No, we're talking about individuals that are making six figures a year. So that should be a worry for a lot of investors out there, a lot of people who were really pushing themselves to the edge. Not a good sign. 24.1% of new insured mortgage debt in October had variable costs, down from 34% a month prior. This is what's going on right now. I think it's important to pay attention. Australia, same situation. Many more people in Australia use variable. So let's watch what happens there. I'd love to get some data on that. Canadian housing affordability hits unsustainable level. Wow. According to the Bank of Canada, by the way. This is important because you see this at a time in which we were told. How many times were we told that it's okay as long as it's manageable, but it's not manageable? Okay, you got me? Canadian real estate has never exactly been cheap, but it's rarely this unaffordable. According to the Bank of Canada's Housing Affordability Index, it hit a 32-year high in the third quarter of 2022. It's nearly impossible for an average household. I have got to keep a straight face here. Let me try that again. That means it's nearly impossible for an average household to buy a home right across the country. I mean, that's how crazy things are. You can't be an average person, average family, okay, with the average house. I'm not talking about buying the lavish house in the fancy neighborhoods. I'm talking about average family, average house cannot be afforded. What does that tell you about the situation? It's no different than all the tech stocks that got bought up through 2020 and then suddenly are turning around. Do you see the difference here? I was screaming about this in 2020 and people did not want to listen. They said, no, real estate cannot fall. Stocks cannot fall. Tech stocks will never drop. And yet here we are. Yes, things can turn around and we can get better. But to suggest that things don't go down is just, it's wild. It's really wild. Comparing this housing market recession to 2008, the mortgage rate shock has caused sellers to pause. Sales fall, production falls, jobs are lost, incomes go down during this period of time when we enter a recession or a slowing down in the economy. When you look at it, there are similarities with 2008, but not necessarily. Okay, so they break it down in this article if you're interested, just showing you housing sales. This is the purchase applications index. This has gone down to a level we haven't seen in a long time. Okay, so why? It's because of higher interest rates. That's very clear. A lot of this is caused by the same exact thing. If we have inventory climbing, well then it becomes a buyer's market. Buyers have options. Buyers don't have to get places that they know are, probably have foundation problems. They probably don't have inspection reports, but you've got to put the offer in today because 62 other people are putting that offer in, and if you want it, well, you got to do it. This is the place where it has the nice school. This is the place that has the nice roads, and so you want to get in. You don't want to have to go into that other neighborhood because it's not as optimal. So they take the risk. Pending home sale index down. I showed you this in a previous video. You look at this all around. In many ways, comparing these two, it's actually worse off in a lot of the stats. So we'll see. What I'm going to tell you right here and now is, if you're still with me, look at the data. I'll bring it to you on this channel. Hit subscribe. I'm going to show it all. What we need to understand is, number one, vacancy. We're going to look at inventory. We have to address how long the Federal Reserve is going to keep interest rates at this moderate level. How long? Will it be all the way through 2023, or will they start to bring rates down? During that period of rates essentially coming down or signaling that they'll be cut, that signal is the trigger point where everything flips. This is an indication that I believe you should be paying attention to. If you want to know more about this, I talk about it with the stock market. You could literally type in the money GPS 60 seconds, or even better, I'll save you 20 seconds. The money GPS 40 seconds, and you will find it. You will find a video that explains how you can search for this information yourself, or simply hit that subscribe and I'm going to let you know the details. Look here. Good riddance to the era of free money. You see, after all of this easy money, housing prices going crazy, stocks going crazy, things have changed. That's the indication, okay? After a period of painful adjustment, I hope we'll settle for a world in which money once again has a price. So, if you are interested, of course, you can take a look at this. It's just trying to give you some insight as to where we were, where we are today, UK, US, Canada, Australia, New Zealand. It's all the same pattern, and you can't get away from it during this period of time. Look, it doesn't matter if you're Amazon, it doesn't matter if you're Tesla, if you're Meta, if you're any of these other stocks, you can suffer the same consequences when easy money goes out the window. It's all the same. Now, let me explain related to real estate what's really going on here. As real estate prices decline, borrowers who have taken on too much debt to purchase their homes may find themselves in a difficult financial position. If the value of their home falls below the amount they owe on their mortgage, they may be underwater, meaning they owe more on their mortgage than the home is worth. This can make it difficult for them to sell the home or refinance the mortgage, as they would still owe money even if they were to sell the property for its current market value. Home flippers, who are investors who buy properties with the intention of quickly reselling them at a profit, may also be negatively affected by declining real estate prices. If the value of the property they have purchased falls before they are able to resell it, they may end up losing money on the investment. One example of when people took on too much debt in real estate and ended up in a bad position is the housing market crash of the late 2000s, also known as the subprime mortgage crisis. During this time, many borrowers took on risky subprime mortgages with adjustable rates and little documentation requirements, and where many were unable to make the higher payments when the rates reset. This, along with other factors such as overbuilding and risky lending practices, contributed to a steep decline in housing prices, and many borrowers found themselves underwater on their mortgages or facing foreclosure. If we don't learn the history lessons, we are doomed to repeat it. You've got to know all of this information. It's so important. You've got to keep up with the details and realize that, quite frankly, there's so very few things that we need to pay attention to. And so you see the repeated patterns. Don't look at all that nonsense. Don't get distracted. Don't go down in the YouTube rabbit hole. Just know the simple matter of fact, the fundamentals, the basics. And that, number one, centrally, is, pun intended, central banks. I'm going to bring that all to you. Let's go on. New Year's cheer in short supply for Britain's battling inflation. Shoppers cutting back on fruit. I don't like that. I don't like cutting back on fruit. Alcohol, different story. But the fruit, come on. Got to have your bananas. All right. Illness and depression are taking their toll on Britons. I'm seeing this all over the place. And I've got some unfortunate information. I'm just showing you this. Let me break this down as well. Has inflation peaked, and will the Bank of England cut interest rates in 2023? Britain could be set for stickier price rises than elsewhere in the world. Even though inflation rate has come down, we're still talking about 10.7% in November. Look at that when you understand the fact that we are in a world in which we've never seen before. The patterns are the same, the cycles go through this period, but we've never had this much debt and had interest rates elevated. Okay, this is really a rude awakening for individuals, for investors, home flippers, for nations themselves, and of course corporations too. We are not out of the woods yet. ECB must stop quick wage growth from fueling inflation, according to Lagarde. I want to make something very clear here. Christine Lagarde wants you to know that if you get a raise, that you're bad, that you are causing all the inflation. How do you feel about that? Is Christine Lagarde correct? Is it you getting a raise, or is it maybe the ECB's actions that are causing a problem? Maybe it was all of the bonds they're buying. Maybe it's all of the purchases of garbage. Well, maybe it's just the fact that you got a 3% raise last year, if anything. All right, persistent inflation, not recession, is the greater risk as BOC, the Bank of Canada, looks to 2023. This is important, of course, because they are saying we are going to be hawkish, quote unquote, hawkish. We want to make sure inflation comes down. They do so by increasing interest rates and keeping them elevated for a period of time. So I'm interested to see what happens over the next little while. Talking about cars right here, just essentially the fact that prices are still very elevated when the used car market, at the same time, there's a shortage of so many different parts. That's still happening today, which is wild, which is unbelievable. And one of the factors is semiconductors. And now when I bring that information to you, it's interesting because some of the semiconductors I've reported to you, they're piling up. They have too many of them. Others, they seem to still need them. And I think in the auto market, semiconductors are still in shortage. That's based on my understanding. Others, not so much. So we'll see if they sort of retool and try to fix things up a little bit. Now I have some unfortunate information. I'm just going to read it to you really quickly. I don't want to, let me just read it to you. Mississauga, which is basically Toronto, food bank CEO says rising food bank usage, cost of living crisis is an emergency. It's an emergency. People that are in the bottom income percentile in the community, this is a quote, are now talking to us about taking their own lives because it's too hard to be poor any longer. Okay? We shouldn't have to live like this. We shouldn't have to read this information. We shouldn't have to. We have to deal with the circumstances that we have, okay? If you're in this situation, know that all hope is not gone. You have to pay attention to the central banks. This is the number one factor. You have to do what you can to increase your income. Anything you can do. I've given tips countless times before. You need to find people who can help you in any way. Maybe you need a push sometimes. Maybe you need a couch to sleep on. Maybe you need something to learn. Maybe you need a new skill. But we must take the action. It's 2023. And at the same time, coming from, when we look at it on a higher level, the central banks, what they're doing is impoverishing people. I can't believe it. The solutions that other YouTubers provide is like, hey, join my $1,000 course and you can follow my trades. Join my $1,000 course and learn how to do swing trading. This is unbelievable. Is that the help? Is that the help that they're providing? Really? We got to do more about this. Anyway, I hope you found this video informative. If you did, hit that subscribe down below, and I'll see you tomorrow.